On Wall Street, stocks were pushed and pulled. Shares traded mostly higher after the Federal Reserve left interest rates unchanged, and we'll have more on that story in just a moment. But those gains evaporated in the markets heading into the close. When all was said and done, the Dow Jones Industrial Average saw a fractional loss to 18,472. The Nasdaq rose 29 thanks to gains in Apple, which we told you about last night. And the S&P 500 was off too. As for oil, prices extended their declines. Domestic crude settled down about 2% to just under $42 a barrel, following a government report that showed a rise in inventories. Gasoline stockpiles rose as well, despite being in the middle of the peak summer driving season. And that doesn't happen very often. As Jackie DeAngelis reports, it's creating a glut of gas on the market.
Crude oil prices are sliding, and summer driving season is still in full swing. Crude oil has seen a near 10% drop in the last month, much closer to $40 now than $50 a barrel. And gasoline down 11% in the same time. Well, it's good news for consumers. AAA saying the national average for a gallon of regular is $2.15. That's compared to $2.71 a year ago. It could be bad news for stocks, as energy companies suffer when prices are low. The drop in prices is because the oil glut continues, and the glut is swelling because producers pumped more and refiners made more product when prices went up. It's a double-edged sword, and the consequence that was feared was exactly this. Just as prices see support, the industry pushes them right back down.
Demand has been excellent this summer. In fact, some weeks have shown a record. But on the flip side of that, all the crude oil that we had stored for months and months and months has been refined into that gasoline, causing a glut in the market.
In addition, while demand has been strong this summer, it drops off seasonally after Labor Day. Some analysts are forecasting another big drop in crude prices, down into the 30s, with a corresponding drop in gasoline prices of roughly 10% by Election Day.
I think most traders will agree that the reason crude is supported is seasonal demand. And in about 4 or 5 weeks, that's about to end. Once it does, I think you're going to see crude oil prices trade into the mid-30s and could possibly hit the low 30s.
A lot of big banks are forecasting a rebalance in the second half of the year, but their theories may not pan out. We're already in the second half, heading into that seasonal slump, and prices are moving lower, not higher. For Nightly Business Report, I'm Jackie DeAngelis.